Alright, does my voice sound normal to you guys? Someone just put a comment in free chat real quick. It's good? Alright. Just let me know if it's lagging in voice and free chat. So, I'm going to start this very quickly. I'm not really going to wait for people because I only have 20 or 30 minutes. I had a lot of work and I had to study for midterms this week. So, first, I'm just going to be going over what I think is going to happen for the next week. And I'm going to tell you important areas you should watch. And then I'm just going to go over a few of my trades and kind of show why I learned them from last week. And I'll probably do that from my alerts channel. So, this week, I actually got this prediction right. So I'll show you guys the prediction real quick. But as you can see, we rejected this 1 hour fair value gap. And again, if you don't know what fair value gaps are or any of this stuff, I did a class on this the first time I ever did this. So definitely go watch ICT. But basically, fair value gap is, hopefully you know what a fair value gap is. Sorry if you don't. So let me pull up my prediction real quick. So it was actually right here. So I posted this on the 14th. So I posted this Friday, and I said we could definitely get something like this. And you can see I already had this 4 hour fair value gap drawn out, and you can see, boom, we got that. And we only completed the first half of this so far, so that's why I was kind of bearish on Friday. We still have yet to complete the second half, so I could still be wrong about that. Keep that in mind. But I think we're going to bounce, and I can't tell you how far we're going to bounce yet, but I can tell you that we will probably go to this zone right here, okay? And this is another fair value gap in the 1 hour. And when we go to this zone, we will either hit it, retrace, and then go up to these highs as I first thought. But since I posted that prediction in Discord the other day, I didn't anticipate this to form, okay? And technically, this is a kind of a break in structure right there. So this is what I would label as the market structure shift. And, well, actually kind of, so it's kind of, that's a break of structure. This is the market structure shift. This is the break of structure. So this is not looking that bullish, but again, this could be inducement, and that basically means this is not a break in structure. This is just inducement, which is labeled IDM, and I have posted those setups before. I have them on my Twitter, and I do talk about them on YouTube. So this could also be inducement. So what that means is we're breaking these lows to go bounce out of this fair value gap right here. And I haven't actually talked about this before in this Discord, but this right here is called a balanced price range, BPR. So if you know what a fair value gap is, you would know that this right here is your fair value gap. So that's your fair value gap, and I'll kind of highlight that. And what you see is, see how there's also this bearish fair value gap right here, this bearish fair value gap right here. And do you see how these both overlap, this bearish and this bullish? So this is called BPR. This is another concept ICT talks about. So that's why I think, like, we already kind of have gotten a bounce so far, but I think this is going to be a really strong zone. And ICT did actually have a take profit order down here at 3574. So we could go down here, which by the time we get down here, that would kind of be bearish because we're breaking through all this. But what I think is going to happen is I think we're going to bounce somewhere along the lines of here, and then I think we're going to go hit this 1 hour fair value gap, and we're either going to retrace and bounce, or we're just going to retrace and go all the way down again. But no matter what happens, I think we're definitely going to get a initial rejection out the zone, and I think I just realized I wasn't screen sharing. Wow. I'm so sorry. Well, you guys can watch the beginning recording of that. I'm so sorry. My bad. Alright, you guys can see now. Sorry about that. I didn't even realize. Sorry about that. So basically what I'm saying is Jeez. Alright, 5 people just left because of that. But hopefully you can all see now. So again, my prediction was we would reject this fair value gap and go down here to this balanced price range, and as you can see by this, okay, so on 10/14 I predicted this. As you can see, that has exactly happened so far. So this is my prediction I made Friday, and as you guys can see, we rejected that and we're down here right now. And I thought we were going to bounce. I'm not predicting exactly where in the zone we're going to bounce, but I'm predicting we're going to bounce. And if you guys see the screen, if you guys see it here, what I was kind of explaining before was this right here. This is a BPR, so that basically means it's a balanced price range. And what that means is, see how we have this bullish fair value gap right there, and we have this bearish fair value gap right here. Obviously, this wasn't respected, but basically what this means is, see how these two, this bearish fair value gap and this bullish fair value gap, line up. So that's kind of how do you draw it. So you draw it like this, because they're both overlapping, and that's kind of what a balanced price range is. He talks about that in his videos sometimes, and these are very, very strong zones. I actually use this BPR indicator. And if you just type in BPR by trade for op, you can start using these. So you can see this one. See how these barely just line up. As you can see, when we retested this, boom, and then we even retested again and bounced. But obviously, the most orders would have been filled in there. But like right here, we bounced out of that. This doesn't really count. This is way too small. Way too small. But you can see how well respected these can be. So as you can see, the indicator actually has one right there too, as I was saying, and there's one right here, which is, I did not notice that before. That's kind of interesting. So if we do get down to the zone, we could respect this. Or not could, we probably will initially. So basically what I think is going to happen this coming week is, now that we have kind of completed my bearish prediction of rejecting this fair value gap, one of two things is going to happen. And there's one thing that I know for sure is going to happen, but basically I know for sure we're going to, if we get to this 1 hour fair value gap, I know for sure we're either going to just retrace off of it and then go hit buy side liquidity, which is right here, or what we're going to do is we're just going to fully reject it, okay? And what I do know for sure is if we get up here, I guarantee you, if you use a smaller time frame, we can scalp puts off this or go short off this, because I know this will probably be respected. It's also a breaker block, and 3672 to 3674, set an alert. I guarantee you, if you go short at 3672 to 3674, you will make money. I am very, very confident in that. So just set an alert in your chart, have this kind of mapped out. It's also a 4-hour order block. And if you aren't in the premium, or if you aren't in my premium, my Discord, this is kind of a free play. So if we get up here, I'm going to be looking for like a 10-point play. Even more. We'll see when we get there if we do, but I'm definitely looking for a small rejection here for free money, but we'll see. So what is happening now is we're bouncing off that BPR. ICT has a take profit order down 3574 right here, so we could go a little lower right there and then bounce. We'll kind of see. So we'll see what happens, but don't forget, set that alert. Trust me, guys. Like, make sure there's not. So when we get up to this level, I'm obviously gonna alert it in Discord if I'm going short off of it. But what I would suggest doing is, once we get up to this level, go to the 5-minute, go to the 15-minute, look for really weak price action candles, and then go short. Don't just take it. But I guarantee you can probably make like 10 points off the scalp. So we'll see. So I'm just going to be going over like 2 or 3 plays from last week that I had, and then I'm probably just going to end it because I have a lot of work to do, as I said. So let's see. So this is from last Friday. So I said get a short here if we get it. So this is a 3-minute, and then this is my stop. So I know exactly where this was. So basically that alert was on the 3-minute. Let me just delete these real quick. And I said I was going to short here if we got it. And you can see, boom, 20-point move off of this just to this target. And then obviously we went like 50 million points more. But why did I say I was going to short there? Well, as you can see, we took liquidity, and I didn't know this was a liquidity grab until we got the market shift. Remember that. You're not going to know something is a liquidity grab until you get the market structure shift. So in this situation, we take liquidity, so we go over these highs. Breakout traders go long, they get stopped. Short traders get stopped, and you can kind of see how everyone gets wrecked in the process. And what happens then? We create a higher low right here, and then we go up. So this was your market structure shift right here. So I'll just kind of label it as your MSS. And once we broke this, I labeled as the market structure shift because I saw we broke all this equal highs. So I was pretty confident this was a true market structure shift. And that's when I said I was going to go short up there. And the first time I actually ended up canceling my order. And then 5 minutes later, I was like, nah, this fair value gap's too good. Why am I canceling? And I said, I'm going to take it anyways. And we can see what happened. And I did paper hand this a little bit. I sold for like 10 points, which is still really good. You can even make making 5 points off of this is you could still make a living off of. So I ended up selling for like 10 in my funded account. And you can see that we also have an order block here. So what that means is price is still going to be supported down by this order block too, which gives me even more conviction. And I said my stop was about up here. Why is my stop up there? Because usually if we have this clean of a fair value gap and there's a giant market structure shift on the large time frame and there's this order block supporting it, and then basically an order block is a green candle for a down move in a downtrend. If it was an uptrend, which is not, this would not be an order block. So basically I kind of keep my stop a little above here because if you're taking an entry off an order block, if it's really clean, I always take it off of the open. So I kind of draw a line at the open. And if we go any more above that, it kind of gets weaker and it's not really as valid. But if there wasn't a fair value gap here, this would have been my entry and then up here would have been my stop. But because of how strong this fair value gap was and how clean this order block was, my stop was a little above it, which is still kind of risky because technically your stop should be a structure break or a break of a last lower high. But if you can see in this situation, this would have been the last lower high. And if you're entering there, 3657, that's a 20-point stop. And there's no way I'm doing that. So this is kind of where you got to pick and choose if your risk or reward is good. If it's not, maybe you just don't enter. And then we also had a fair value gap. If we got up there, I was also going to enter this one too. But we never got up there, obviously. And this one is kind of supported by an order block as well, as you can see. So this was a nice move that we got last week that I alerted. And again, I didn't know this was liquidity. Like, this could not have been a liquidity grab, but as soon as you got that market structure shift, I knew this was a liquidity grab, and that just makes me more confident when you're tracing to the fair value gap. And if we go to the 1 minute and we draw like the premium discount fib idea that I've been showing you guys, you can see that it was in fact a premium. So we dropped from the last higher low or last lower high to the low right there. But then as you can see, we make a new low. So before we get up here, we actually move the fib a little bit. And then we can see the 0.5 retracements right there. Go right above it and premium, and that's when a bunch of algo is short. So that was very, very key. And again, it doesn't have to be in premium if you want to short. Like, if we're on like the 30-minute time frame, and let's say, so our play is right there, we're on the 30-minute time frame. We see that on the larger time frame, we're still in premium technically in the higher time frame. So on the lower time frame, yes, you can wait for price to go in premium in this time frame too, but technically we are in premium in the lower time or on the higher time frame. So even if this wasn't the 50%, you could still take this. It's just lower probability in my opinion. So that was one of the plays. Another play was, let's see. By the way, if you do take this short and the bias is bearish, your target's always going to be the next swing low because that's where the algorithm is going to want to go. And this is sell side liquidity. This is called sell side liquidity. This is where smart money sells. You can see we go under, then we push back over, stopping out everyone who went short on this line, blah, 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 and then just kind of chop after hitting that line. This is why that's your target, because, again, if you're holding past liquidity, that is not good because we could easily reverse, and then it could just shake you out. And you can see we actually rejected this fair value gap too. We went a little bit over it, but that's okay. And then the afternoon, I just kind of want to point out something. So I never actually alerted this, but I was on a few chats and I said this. So this was lunchtime. Let me just draw a line real quick. So from 12 o'clock to this to 1 o'clock was, or no, 1:30 basically. So 1:30 is the start of the next kind of trading session, and then 12 to 1 is lunch. You definitely do not want to trade between 12 and 1. But this was a good fair value gap to take in my opinion, and you can see what kind of happens here. So see how we just don't really respect this. We kind of respect it with this wick, and then we go down, and you kind of could get a 10-point move off this. But this is very unclean price action, and technically, if you take this fair value gap, remember your stop loss is always going to be this last lower high because your stop loss has to be structure breaks, because again, that's how the markets work. It's not going to stop you out if it's a structure break and the bias is bearish. We're not just going to randomly go over this unless it's a liquidity grab. But in this situation, we had to break a structure, and we already had the liquidity grab up here technically, so it wouldn't do it again. But basically, you can see how if you went short in this fair value gap, your stop would be like 10 points. And yes, although your stop didn't hit, I would not want to be this much drawdown if I'm being honest. I don't know about you guys, but you can see this fair value gap technically still works because every single time you take this, your stop loss is a structure break, and boom, we never broke structure technically. So this is lunchtime price action, and this is why you shouldn't trade it because this was not as respected as much as it should have been. Ideally, we should have literally just went right up into it and then kind of hit the target very quickly, but because it was lunchtime, it was just not a good time to be holding because of how much drawdown there was, which is not that great. And then you can see we create another fair value gap right here. And again, we kind of go over this a little more than anticipated, but we do kind of respect this a little more. The 1 o'clock mark is actually right here. So this is when price action should start to get a little better, and you can kind of see it does. But during lunchtime is not great price action, and although you wouldn't have been stopped, you would have been in a lot of drawdown if you entered here. So like if you're waiting for a premium to short and you entered this wick, you would have been in a lot of drawdown there, which is not very great for some people mentally. So that's just another reason why I don't really want to trade for lunch that I kind of noticed. And then lastly, there wasn't too many plays end of day. If we go to the 5 minute, I think this was a tiny fair value gap right here, and we went up into it twice. I usually don't take fair value gaps this small, but they can still work obviously, especially being that this is supported by an order block. And notice how this order block, notice how this green candle before this down move, notice how there's one red candle before it and then a green candle, then a red candle. I like these order blocks the best because if we had a green candle, green candle, green candle, sometimes some people say, oh, the order block's down here, but then other people say, no, it's right here. So the kind of single one is better in my opinion. And if we go in the 4 hour, you can kind of see we're in the same situation right now. We only have one single green candle, so we have a red, green, then red. So this would be a true order block in my opinion, rather than being a green, 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 and or no, a green, red, 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 and then green, then down. So I kind of like it when there's a single green candle, not multiple green candles, then a red move, which hopefully that kind of makes sense to you. So price action, end of day, like I said, it was decent. Obviously you could have entered there, but which wasn't premium, and This was also probably the 0.7, which is the optimal trade entry. Yeah, this was almost perfectly the 0.705. If you guys are interested in fibs, I would definitely recommend taking fair value gaps only with the 0.705. You'll be very profitable, but you will have to be more patient. And I'll go over the optimal trade entry in another video for you guys watching this on YouTube. So I'm just going to go over one more play real quick. Again, this is going to be really short, as I said, because I have a lot of work. So I'll go over a play I had Thursday, and I'll kind of show it. So this play was actually a really good play. So I said, going to try along this zone, black line stop loss. So can I expand this at all? Okay, so this was the play. And you can kind of see I had this fair value gap right here, and we had this order block, and then my target goes up there. So let's go to the chart and quickly see what happened. And this was a great play. I learned this on my Discord as well, and I know someone who banked really hard in this one. And this was on the 3-minute. And there is something I do want to point out about this play, which is very important. So it was right here. So first of all, I'm going to go to the 1 hour. We kind of got to determine, why did I go long that high up, okay? So the zone is right here, but we're already so high, and we already pumped off a CPI after the drop. Why did I long that high? Well, I thought that we'd go hit this 1 hour fair value gap, and I saw that we still haven't hit it. And this is kind of like considered what people call a point of interest, which basically means that it's kind of a magnet. And don't take this the wrong way, but not every fair value gap will be a point of interest. But this was a good one because of how clean it was with this order block. And based off of screen time, I kind of expected we were going to hit this. We also had this one too that we still hadn't hit. And you can see as soon as we hit this one, we rejected off this as well for a nice move. That was almost a 30-point move, which is kind of crazy how, even though how small this is, we still rejected off of it. So I was still bullish. I thought we were going to hit these fair value gaps. So that's kind of why I still went long up there. But I also want to point out something else. On the 3-minute, okay, on the 3-minute, yes, we're in premium, or yes, we're in discount. Yes, this was exactly this 0.705 fib. And again, you should definitely, I don't think this is considered a fib, actually. A fib would be 61.8, whatever. This is just, I just call it a fib because I use the Fibonacci retracement to draw this. So again, if you don't have this in your chart, you should definitely draw it. But if we go to the 5-minute, I want you to notice something. On the 5-minute, the fair value gap was actually right here, okay? And you can see it's a little less respected. We kind of go through it more. So why did I pick to choose the 3? Well, I picked to choose the 3 because of, one, screen time. With a lot of these fair value gaps, I like taking the last possible one. And you can see that this is the last fair value gap before the move up. So we had this fair value gap, this fair value gap right here, which was kind of respected. And then we had this fair value gap. And the bottom one won't hit every time, especially if there's like 2 of them in discount. But you got to remember, if we do hit this bottom fair value gap, that's the last possible place that smart money is going to buy. So it's kind of a decision you're going to have to make because you're not guessing, because smart money could buy here, smart money could buy here. But if we do get to this fair value gap, there's no other fair value gap below where smart money is going to buy. So it's kind of a more confident entry, because if you're going long in here, you're going to tell yourself, oh, there's also a fair value gap right here, so how do I know if smart money doesn't want to wait a little bit? Well, that's why I kind of take the bottom fair value gap, because it's a more safer entry, in my opinion. So this is definitely really something to note and go back test, but I really recommend taking the last fair value gap. Sometimes you will miss trades though. If you have enough money to average in, definitely average in here, then average down here. But again, I always take the last one because there's no other one smart money can enter, and it's closer to the swing low. So first of all, your risk to reward is going to be better. So if you're going long and you're entering as soon as you get in here, your risk to reward would be 2 in this situation. And why is it 2? Because this is the target, because this is the next liquidity. So in this situation, it'll be 2. But if you entered up in this fair value gap, it would be 1.25. So this is going to have a better risk to reward, and it's kind of a more confident entry because it's the last fair value gap possible that you know smart money has to enter. If the bias was bullish, you know smart money's going to enter here because there's no other place down below. So that's kind of something I want to point out. And again, there's that one order block formation set up. So stop would have been probably below the 50% threshold. So right under this black line, and obviously we never hit it. So we can even kind of move our stop up a little bit. So this was actually a almost a 1 to 3.5 risk reward because this was the 3 minute. This was actually the 3 minute fair value gap. Obviously, you can't see it now because I'm in the 5 minute, but that's kind of something you want to look for. Hopefully, if I could only tell you to take one thing out of this class, it would kind of be drawing the 0.705, looking for that last possible fair value gap. Those are going to give you the safest entries, and trust me when I say that. And another thing you could do is you could also stop out if it goes under the 0.80. So I had 0.79. But often if it goes under this 0.79 line, the play's kind of dead. Not every time. You should still have your kind of stop loss under structure, but again, this is going to make your risk reward way worse. So if you want an even tighter stop, kind of do your stop under the 0.79. Usually when we go under there, it's not that great. The 0.88 is the next support fib, but not very strong in my opinion. So yeah, those are kind of the two plays that I'm going to go over for now. If you guys have any questions, let me know in free chat real quick so I can answer them. If not, it's all good. I have to go anyways. But I'm going to give you guys a minute. Let me know if you have any questions. Just put it in free chat real quick if you want. And this was a 20-point move which is really good. My losses are usually like 3 to 5 points, which is literally nothing compared to this. So basically what that's saying is I could have, if my stop loss is 5 points, which is basically never because my stop loss is usually 3 or 4. If it was 5 points, I could have 4 losing plays and only 1 win to balance this out, which is kind of really good. So I'm going to give you guys a minute. Let me know if you have any questions in free chat. But if not, feel free to leave. All right, doesn't look like anyone has questions. But yeah, you kind of saw my buys for the week and what I think we're going to do. But yeah, hopefully you guys enjoyed, and should be doing this again next Sunday. So remember, you can DM me or do whatever across the week if you do have any questions. So other than that, have a nice week. Good luck trading this week, and peace.